Nice. Let's get going again. Welcome once again, folks, to our Monday morning market review. And I hope you guys have had a fantastic weekend, and also that you enjoyed last week's trading. For those of you who were able to join us for the first of our trading boot camps, I hope that you got a lot of value out of that. Certainly the last couple of weeks have been tricky in terms of trading conditions. We did mention that last week, Monday, in our market review as well. And certainly the first part of last week, that actually got even trickier. But the market conditions did seem to open out towards the end of the week. So hopefully the principles of convexity and everything else that I've been teaching you guys really showed themselves last week, because for anybody who was able to keep taking the next trade, it ended up actually being a reasonably profitable week. Nothing to write home about. But still, given the fact that I think right up until Thursday, certainly Wednesday, late Wednesday, conditions were as tricky pretty much as they can get. Lots of chop in the market, extreme chop, I would say, in fact, with potential breakouts just reversing continually across all time frames. So certainly all the lower time frames. In any case, as I say, it ended up being a pretty good week, and certainly from my point of view, a very good teaching week. As I always say, it's easy to be a hero when market conditions are kind and trading conditions are, well, it's easy for anyone to be profitable. The best time for you to learn the things that you most need to learn are when conditions are tough. It's all about being able to protect your capital, keep your powder dry, so that when trading conditions are easy, you've still got your capital and you haven't lost all your profits from your previous profitable period. And that's just the nature of trading. It is one of the things that, of course, makes it a challenge as well, because very few people know how to change the pace of their trading, to change step, if you like. The other thing I just wanted to comment on briefly before we get going is last week we were able to start introducing a couple of more advanced trading concepts. I had been promising to do that for quite some time, and many of you more experienced members have been pushing me to do that for a while. And we did use last week's bootcamp as an opportunity to do that. So for those of you who are more experienced, I hope you found value in that, and that all of that makes conceptual sense. I'm sure you can see that it's really just a natural, logical follow-on from all the things that we've been doing already anyway. But I also understand that some of you are not as experienced. Some of you are newer to the Academy, and I just wanted to reassure you that, first of all, the more advanced concepts is something that you will get to. And if it was a little bit overwhelming, I'd encourage you just to go through those recordings again, and don't worry about overlays, don't worry about hybrids and so on. Just stick to the main training in the Academy, and also then in the bootcamp, where we spent time specifically on our technical analysis, and then obviously also the impulse strategies. So don't allow yourself to be distracted, or certainly not overwhelmed by the newer material for the Academy. This was also an opportunity, as I say, for me to introduce it. So that training is not yet available in the Academy, but of course it will be in due course. However, for those of you who want to start experimenting with those techniques, then you now, I think, have the information that you need to be able to do that. But I would still encourage you to practice it first on a demo, and also back test it, so that you can reassure yourself as to the positive expectancy behind it, or the expectancy generally, I should say. Certainly when it comes to the overlay, remember, it's not necessarily designed to be profitable. It's there to help increase convexity at an account level. But do the back testing, do the forward testing on demo first before you jump in boots and all and start trading it actively on your live account, certainly on your funded accounts. All right, so that was just some comments coming out of last week. let's move into our charts now. So I'd say that as of Thursday, things certainly started opening up across some of the pairs that we trade, which really made conditions a lot easier, and we've had some really nice winning trades since then. But let's look not just at last week. Let's look forward to what we're looking at for the week ahead of us, bearing in mind that these favorable trading conditions that we've got prevailing at the moment may well evaporate as quickly as they came. So you always need to be very quick on your feet and nimble, but do remember that that's precisely what our uh, analytical methodology helps you to do, combined with your trading strategy rules. Okay, so Euro USD on weekly, no big change. Last week we just had that bearish candle, and that looks like this on daily, where technically we do still have a trend. So we started the week last week with another phase one, bearish phase one wave, but marginally being a phase one wave, retracing. That high has been ringed. It's rolling over. We may well get another phase one. At the moment, this is definitely just a weak trend. So we're not really looking at that for anything else. At this stage, there are much nicer instruments to trade out there. Moving on to cable, and again, I'm generally going to just look at weekly first, if the technology will catch up. Okay, so obviously I've updated the technical analysis during the course of the weekend, and this week's, well, just the first few hours of the week, we've already had last week's high ringed, so that will in fact be the end of that that bullish retracement wave. But either way, you know, we're still very much in the middle of this channel. We have a secondary support level that this is like the shadow of our HDC channel, and is obviously going to become at some point, unless of course we get a lower low here, it could well become the bottom of our HDC channel in the weeks to come. So nevertheless, that's not really anything that we're interested in doing. And yeah, it's for several weeks now, it's been pretty much going just meandering around inside of that range. However, on daily, slightly different story. As we come down to test those higher time frame support levels, we do also potentially have a bearish breakout taking place today. So we need to wait and see if this support level is respected at the end of the day. Then not really interested in that. And those of you who are wanting to trade the overlay more aggressively as a ranging strategy might well be looking out for a bullish setup there. However, if we do get an outside close, then of course that is a reason for us to start looking for bearish H4 impulse trades. So it's nice to see the boundaries of some of these channels being properly tested at last. USD JPY, nothing changed last week, just that inside bar. On daily time frame, you'll notice that we've just got phase two again. Really, again, you know, it's inside channel on both time frames. Nothing for us to do. Let's just wait and see. Dollar Swiss up next. Weekly time frame, deep inside of the channel, and we are also potentially seeing this low being ringed as we speak with this morning's price action. But I'm not going to worry about that for now. It is obviously a potential. Sorry, let me just go back to that. For those of you only trading WM patterns, this is a valid W pattern setting up. So if you're not worried about the channel, you'd be dropping down. If you're trading hybrid, then maybe you'd have entered this morning, because Friday's candle was in fact an impulse candle, if I'm not very much mistaken. Let's just double check that. Right, so close 95.2 and the high, what am I doing? 93, yes. Okay, so by 2 pips. And yeah, as I say, if you looking at this double bottom with a bullish impulse candle, phase two, you might well be all over that already. Remember, with the hybrid approach, we are in fact looking for the phase two. So that's one of the reasons why it's called a hybrid strategy, because it's really a hybrid between continuation and impulse style trading. All right, so that's dollar Swiss for you. The loonie, as it's called, USD CAD, showing some more interesting stuff, obviously, as many of you know already. But when it comes to the weekly time frame, still nothing. However, and this is just the first few hours of the week, should this candle close above that high, it means that we will have a bullish impulse wave. However, we're more interested in this in the lower time frame, of course, because we had this bullish breakout. We had a really scrappy time with this pair, obviously, as you can see, where we had a previous breakout, phase two, all of, especially this last bearish wave really being a fakie. However, especially when you consider the fact that this is this was our previous four-wave channel. We were obviously looking at the potential breakout from that channel previously. However, our new four-wave channel is up here. We had a renewed breakout on that last week, Thursday, and those of you therefore trading H4 Impulse would have been pretty much all over that and may well be into a bullish H4 Impulse as a result, and may even have take profit on that. But the fact that we are, until this bullish move comes to an end, we still treat this as a trend. And those of you who want to start trading overlays, obviously, will be looking for that breakdown in bullish cyclicity on the H4 time frame. Right, Aussie USD. Dear, what's happening here? Apologies, let me just minimize that. There we go. Right, another one where we are seeing, we saw a breakout, obviously, on this one on Friday. Now, let me just quickly remind you that on weekly, we have been outside of the channel for quite some time, and we've discussed this over the last month or so, even more, where we had that original breakout in the middle of last month, so pretty much a month ago, or just over. So this is now the fifth week where we have been outside of the channel and technically in a phase one wave. So this has been one of the pairs that we have been talking about as being appropriate potentially for daily impulse. And as you know, for those of you especially who've been paying attention, and we're in the bootcamp last week, you guys know that I had a daily impulse on this. We've actually tried a couple of them. In fact, we had the one which got stopped out with that spike, but gave us another entry. Well, this one's been at break even for quite some time. I think, where was it? 1, 2, 3, 4, 1, 2, 3, 4, 5. Was it last week? The close of last week, Wednesday, I think we were pretty much at break even. And then using the 2 5-step rule, obviously on Friday, we are at break even. So that's on its way. If you're using standard targeting, it's not that far from the take profit. But we never know where that's going to go. So obviously that also means, however, that for today, with the breakout of our full wave channel, if you're a channel trader, you'd be looking to trade this with an H4 impulse, bearing in mind that we are still very much inside of this bearish phase one wave. We need to have that pullback before we can do anything else. So it's been pretty aggressive. Let's face it, a lot of these moves have not actually allowed us to get into the next phase one because they are still going. So as I say, this has really, really opened up across many of these trading pairs in the latter part of last week. The last of our majors and minors being the Kiwi, not looking nearly as attractive, obviously on weekly time frame here, as the Aussie. So technically, this is still a trend for those of you who are using that short list of mine, because we did get this breakout. We haven't yet had a breakdown in sequentiality of cyclicity. We continue to have the support level tested over the last several weeks, but it's not really carrying on going. So looking for quality. Well, first of all, we're inside of the channel. Secondly, there is no quality in this current phase one wave. And it looks like that on daily. So you can see how the support level continued to hold also again through the course of last week. So no change really from the previous week's discussion. Right, so moving into our yen crosses. First of all, euro yen. We saw last week that we had the close back inside of our four-wave channel. So that was obviously on Friday. So that's a bit of a change from last week's market review, where we still had the support level being respected. Well, it's now been broken. And the first few hours of this week not showing much change in intent in terms of the market's directional bias there. So back inside the channel, we also, if we do get a lower close this week, it would mean a breakdown in sequentiality of cyclicity, phase one, and therefore an end of what we have been able to treat as a trend for several months now. So this bullish trend would be confirmed as over. However, on the daily time frame, obviously, slightly different story. And bearing in mind that our four-wave channel has moved slightly, the bottom of the four-wave channel was here before, so we were looking at this as well, as you will recall last week. Any case, especially now again today with a renewed breakout below the new support level. So even though we had a very short it looks like a brief interruption to this bearish cyclicity, with Friday ringing that previous low on the support level and giving us a higher high. It looks like we do have a continuation happening right now. If we go to the drop down to the 4-hour time frame, that's what it looks like for anybody who was looking to jump in already. You look, I know it was pretty late, so you probably would have waited. But in any case, if you weren't wanting to start getting involved in the market around the weekend, either the end of the week or the start of the week, you're going to have to sit back and wait as well for a bit of a pullback on this one. But yeah, looks like we are getting this breakout again on the daily time frame. GBP yen has not been as pretty a picture. Still on weekly, obviously, that's for some time we've been inside of that channel. So unlike the euro yen, this cyclicity is not yet over and not yet threatening to be over this week. So very weak. We're not interested in trading this, obviously, but it's worth keeping an eye on that. Still coming down. And here on the daily time frame, we were discussing the greater sort of level of weakness in this one compared to the bearish movement on some of the other yen crosses. So having said that, again today looks like we're getting a breakout of the four-wave channel. We've been waiting for that. Really, we had a much deeper pullback previously, and also even this bearish wave didn't close outside of the channel. So we may well be seeing for the first time in quite some time an actual break outside of the channel, which also then sets you up for trading the lower time frames. Just be careful, of course, about your correlation. You can't have too many trades going at the same time, certainly opening too many trades at the same time. With the same currency involved, in this case, the yen. So Swiss yen not showing the same kind of thing. We technically have been in a very messy sideways pattern here. It's really a flat phase 2, if you like. So this is really nothing for us to do up until perhaps now, where we can see if this continues this week, we will be ringing that high and potentially back into a bearish wave, which would also be valid for folks who are trading M patterns. Outside C close over here. And if you are more aggressive and you're wanting to do this using a hybrid approach, you just need to be looking, well, let's just go to the other chart on the daily time frame for some indication that you can get involved. I'm not sure that well, I suppose we already have that. If you were looking for this bearish cyclicity, we kind of already did have it. But the first impulse candle on this one, from a hybrid point of view, was last week, Thursday close. We didn't really discuss this last week. Quite frankly, there's nicer pairs to trade. So let's move on. The next one should be CAD yen. Yeah, okay, so you can see that this trader, this is on the funded trader program, has almost hit a standard take profit on CAD yen. So I assumed, because we also, of course, we did have the bearish breakout from the four-wave channel already last week. what was that, Wednesday's close. So you can understand why this has been a much nicer one to trade. It's also a valid M pattern on the daily time frame. So just about to hit take profit over here for a nice win. Well done, well spotted. And it also follows on from some trading that we were able to do previously if you were looking at the M pattern. So nice one there, you know who you are. Really happy to see some of you guys moving through the ranks with your funded accounts. You know, it's just a matter of time. It's like erosion. You know, no rock can withstand a continued pressure of wind or water. Eventually it crumbles. Same thing with trading, folks. Right, so Aussie yen inside the channel, valid M pattern, of course, as you know, those of you who are trading WM patterns, and has been for some time. But on the daily time frame, again, we had on Thursday's close, we definitely had that break outside of the channel. If you were trading the M pattern, you got involved a little bit sooner. That was the hybrid we discussed last week. That was the first daily H4 impulse. And 1, 2, 3. Yep, that's the appropriate trailing stop as well. Also getting very close to the take profit on this one. Okay, so I can see that the trade on this one is obviously limiting the risk across some of these pairs, but I'm pretty sure that you had one of the previous trades on this pair anyway. And the last of our yen crosses coming up, starting on weekly. The New Zealand dollar not showing the same directional bias as the Aussie. Obviously, now I discussed as well that way back up until about maybe 10 years ago, Aussie New Zealand dollar were highly correlated, similar to what we generally see with the euro and the Swiss franc. That certainly hasn't been the case for some time, and we'll see what that pair looks like in a minute when we get there. But we've had quite significant differences in the way the Australian dollar and New Zealand dollar are trading. So weekly time frame for this is really nothing for us. Inside bar last week, and on the daily time frame as well, you can just see it's been really choppy. Respected that support level on the 4-wave channel through the course of, well, was it last week or just at the end of the previous week? We would have discussed it. Nothing doing here, no WM pattern. So we're pretty much staying away from that. And that's the important thing, folks, is don't trade conditions that are not appropriate for your strategies. That's really such an important principle that I do try to teach you here at the Academy. Right, moving into our Euro crosses, Euro GBP, still absolutely nothing for us to look at on the weekly, or if we see what that looks like on daily. It just we stayed quite far away from. Oh, sorry, I've moved on to Euro Swiss already. Let me just go back to that. Right, just using a different machine here, and it's not terribly happy at the moment. So just allow me to close a few things down. There we go. The surveys that I've been asking you guys to complete. And right, there we go. So let's just go to daily. We saw that breakout last week, came straight and immediately back inside of the channel. So there was nothing for us to do, and we're still in that wave. So that's really pretty boring. And then on Euro Swiss, a little bit more action, just on weekly first. We are inside of the channel, but there is intact bearish cyclicity. It has been for quite some time, which looks like this on daily. And you can see that it's almost like a flag pattern with a flagpole in the early part of this year. And yes, so we did get a breakout. I've never been particularly interested in trading this instrument, as you know, but we did get a breakout. And if you were looking to trade it, I'm not sure if there was anything that set up. There was an overlay on Friday, which went straight to target, but otherwise, it is outside the channel. It is trending at the moment. It is respecting that resistance level here on the daily time frame. So if you were looking to trade Euro Swiss. Right now, you might, if you're trading a hybrid, be looking for a breakdown in this bullish cyclicity. Looks like you've already got it, actually, and may well have shorted this market already. Certainly, if you're trading around, if you're prepared to trade around the weekend. So interesting one that you'll notice that this bullish cyclicity did break down late Friday. Bearish impulse candle showing itself first thing this morning, and a bit of a spike there with in the last short while, in the last 3.5 hours, but you'd still be safely in this trade, and that's pretty much it. But it's too early for folks who are trading the H4 impulse. You'd need to see certainly either this high ringed, or if you're happy to trade the bearish inside bar, you'd be looking at this only tomorrow. But I do think there's better things to trade. So Euro CAD, still nothing. We have certainly had quite a strong reversal here in cyclicity with inside of our channel, but we don't have any valid tradable patterns as yet on that time frame. But coming to the daily, you'll notice that when we had that initial breakout, it did come straight back inside of the channel again. But cyclicity remained intact. And then, of course, on Thursday, we had another breakout of from this resistance level of our channel. So certainly something, also not one of my favorite pairs, but tradable definitely since then. So if I was just to, and obviously now as well, looking at Friday, which is the first day we could potentially have looked at this, yeah, we had unfortunately these multiple non-impulse candles, 3 in a row over here before we finally got an impulse candle, and that was only the final candle of the day. So you would really have only looked to take and trade first thing this morning on this. Had you done that, you'd be doing pretty well. So again, all this trading around the weekend, sometimes it's appalling, certainly not this week. Euro Aussie, very similar picture. Maybe not quite as strong, obviously, looking at this, but likewise, outside of the 4-wave channel. Remember, this is not an outside C close, but if that's not an issue for you, if you're more aggressive about it, same thing, looking again on Friday. And in this case, you can see we actually did identify a trade over here, which many folks did take. So obviously not this trader, and that's fine. Just shy of that take profit, but should be pretty close to break even on this trade in any case, using the 3-6-step rule. Euro NZD, here's another one of these examples of the New Zealand dollar. Really absolutely nothing. We've ignored that completely, and quite right too. Right, moving into our pound crosses, GBP Swiss first and foremost, bouncing along on the support level here on weekly, and of course last week with that bearish inside candle, not changing anything. We had this attempted breakout. When was this? Going back to the 8th, and since then, absolutely nothing at all. So yeah, you can see that we're having possibly another test of that support level, but our 4-wave channel has been revised. Excuse me. So that's not something that we're interested in. GBP CAD on weekly, you can see Canadian dollar again coming into focus. Nothing for us on weekly because we're deep inside the channel and there's no valid pattern. However, on daily, definitely. So looks interesting, obviously, today as well, with this Canadian dollar weakness. We've also noticed over the last while, the pound has been overall reasonably strong, but the Canadian dollar generally weak. So this is one of the more impulsive in nature. So even though on the weekly time frame, unfortunately, there's nothing to look at, this is a very nice W pattern over here, where when we originally had the breakout of this 4-wave channel, the phase 2 came back and absolutely respected that. We spoke about this pair quite a bit as well last week, where a couple of the attempts, didn't really work out, and overlay did, and now we're off to the races again. So just coming back to daily, clearly, we've been in a phase 1 of this as soon as we had that bullish impulse candle. So from basically the start of the 15th, and that's what, if I just go back to that, if you've been trading since this pair since then, There've been a couple of attempts at it. And although we did have on this time frame a bit of a breakdown in sequentiality of cyclicity, giving us that winning overlay, you could well be have been looking to trade this again this morning. I'm not sure if on this broker this was a impulse candle, 72.2. And the high 70. Oh, just okay. So by 1 pip, basically, this is an impulse candle. So if you were if you had your eyes open first thing this morning at 4 a.m., you would have jumped into an H4 impulse on this, and it'd be on its way. But again, around the weekend, obviously we don't often do that. But we are in a phase 1 wave now. So you're going to be looking for 2 things if you're trading overlay and impulse. First of all, you're going to be looking for a pullback, giving you an opportunity for potentially another H4 impulse on this. And then secondarily, you're going to be looking at a breakdown in cyclicity on this time frame to short it on an overlay. Simple as that, folks. Really not complicated. Right, GBP Aussie again. Yeah, you can see we've got some action going on. Pound strength against the Australian dollar. Outside the channel here, and certainly from the start of last week, we were looking for a daily impulse on this, and that was, you can see, I think for those of us who are looking to take a kind of a hybrid approach, we had one attempt which got stopped out. We then had a second attempt, which is at break even and is currently running, and that was more hybrid. And then finally, we had that set up with the close on Thursday or open on Friday for a daily impulse. Obviously, this was post boot camp, but we did mention it, and hopefully you folks were keeping an eye on it, because that was a valid entry first thing on Friday morning for a daily impulse. So not many daily impulse trades at the moment. We've obviously got Aussie USD short. Here's GBP Aussie long. So at least a couple of them at the moment, which is not too bad. Right. I know, Nivek, you also shorted the market again on one of yours. I can't remember which pair it was, but looks like that's also working well. So that's GBP Aussie. GBP NZD, again, New Zealand dollar proving itself to be pretty well worth ignoring right now. Last year, Kiwi-based instruments were very profitable. Right now, it's not showing anything. This one's also about to hit take profit, just as we bring it up. Okay, so that has just hit take profit. And if I just stick with weekly first of all, on the weekly time frame, we're not really interested in this at all. But obviously now those 2 bearish candles in the last couple of weeks look like this on daily. And what was we used this as a way of illustrating the difference between outside and inside C closes last week, where this phase 2 wave that came to an end with this bearish engulfing and impulse candle on the close of last week, Wednesday. So that was obviously now a very nice outside C close, showing real bearish strength in this market. I mean, the combination of factors here was something that that was quite special. So the Swiss franc, probably the strongest currency of the lot over the last week or two, and the Canadian dollar the weakest. Therefore, this being probably one of the best instruments for us to trade, obviously in a bearish direction. So all of the factors coming together to really give a nice trade there, and a standard target just having been hit now on what would have been, I guess, this H4 impulse here. That would have been taken on the 16th at okay, so pretty much around midnight broker time. So obviously this trade able to grab that one and rolled over. We also did have an overlay on this late last week, for those of you who paid attention to it, because we had this breakdown in cyclicity here, failed to close with a lower low, and took a bullish trade on that. It didn't work out. You know, we lost just under a half a risk unit on that, but no big deal. And if you were interested and you'd missed that first one because conditions in the higher time frame were still right, we had another potential setup to short this market with H4 impulse. So either way, whichever one of those you took, standard targeting, that target has literally just been hit. Right. You can see there's these sort of lower down on this list of instruments. We've got much better trading conditions than some of the others. So it starts becoming obvious which ones you should be trading and which one's not. Right. So this is, I think, the trade that Nivek, you are in as well. You can see here on weekly time frame, with that bearish engulfing impulse phase one candle, phase one wave, closing out, well, the week starting the 11th, basically, which is when we started to look at this, which was last week. So last week, really, it ended up just being an inside bar, but definitely everything about this was correct for us to look to trade it. And let me just go to the other chart. On the daily time frame, that was the strong bearish breakout candle, perfect phase two, likewise, very strong outside C close, and clearly a nice setup to short this for a daily impulse. So very straightforward daily impulse. You can't really get prettier than that or more straightforward. So done and dusted. You can see the stop has already been trailed a little bit using the 2-5 step rule. So that's that one. You could also clearly, since we had this high ringed, be looking to short this on the H4 time frame. We did have a go at that. We spoke about this last week. We had multiple, well, I had a few attempts at this because of the breakdown and cyclicity, but it's really only got going for an H4 impulse. Where was this? Yeah, on Friday. So Friday at I think 4 p.m. we had that bearish impulse candle, and therefore a nice easy short on this also for H4 impulse. So a bit of loading up on this instrument, but certainly it's exactly the right thing you should be doing when you get such a pretty picture. And this one, had you taken this trade, you'll see it's also just hit take profit. So a couple of trades literally hitting take profit in the last few minutes. So if you were trading this also on a hybrid, I think that hybrid didn't survive. So small loss on a hybrid with this retracement, but that really just set us up again for shorting this on the standard H4 impulse. But you would have also taken an overlay, and that ended up being a small winner. So scoop back some of that money. Right. So very nice picture there. Everyone should be trading that pair. And Aussie CAD, you can see on weekly, we've had that bounce on the support level. We discussed this at the start of last week. Last week was really nothing to write home about. This is definitely not something that comes anywhere close to the other stuff that we've been looking at. And here you can see we're very much inside of a channel as well, even on the daily. So that's definitely one to ignore. Aussie New Zealand dollar, I mentioned it's been quite interesting. And last week, you can see we had here on a weekly time frame, even though we're very much inside of the channel, last week that bearish impulse candle also gave us an impulse phase one wave. But what that all pretty much happened in a very short space of time. Last week, it was Wednesday, I think, wasn't it? So I know that those of you who are trading WM patterns, some of you scooped that on this time frame, but I think also if you drop down to H4, you'll see it all really happened almost in one candle, and then the following H4 impulse on this only if you're trading the WM pattern was there. I know that one of you has been in I was using advanced targeting on this as well, using the advanced targeting option that's available in the trade manager, which basically means that you've carried on using the 3-6 step rule. And I know that you are still in this with your stop just above that high. So well done to you on that. Right, then we've got Kiwi Swiss, nothing on weekly, clearly. We had that false breakout last week, didn't go anywhere, so quite happy to basically just leave that one alone. We did talk about the fact that, well, we first of all had an overlay, but we did get a setup to short this on H4 impulse, which was a loser, and now we're just sitting with this bullish cyclicity, which is the retracement wave that's brought us back inside of this range. But bear in mind that cyclicity is still intact, and I think we even have, no, actually, no, we don't actually have a valid M pattern here because that's an inside C close. Right, so last of our currency pairs on Kiwi CAD. Here again, Canadian dollar showing itself, looking first on weekly. However, that support level continued to be respected. We did discuss this before, but last week you can see we had that very strong bullish impulse candle coming from that Canadian dollar weakness. And clearly as well, we also had that breakout candle that we discussed that closed out on Wednesday. So it's effectively a trending market, and this has also been one which now many of you would have hit your take profits in the last 15 minutes or so as this took off. It hadn't yet hit take profit, I know, by the time we started this market review, but clearly it has in the last 46 minutes. And one other thing to note as well is that the stop would have already been trailed to break even. So this is a bit outdated. This is from last week. All right, so that's that one. For those of you who are interested in gold and a couple of the indices, gold still very much stuck inside of that channel on weekly, but bearing in mind that this bearish wave was in fact a phase 2 because it failed to close below that low. So technically this is still a trend, albeit very, very weak. It is just not a range, let's put it that way. But should we get any ringed high before we get a higher close, that would be the end of that. Looking at a daily with this bullish wave here, we managed to get the H4, the H4 channel just managed to come down to this level, which means that we did get that breakout, but then Friday closed back inside. So if you were looking to trade this at all, this bullish H4 impulse on gold just didn't make it to take profits, ended up getting stopped out. We did have a bearish overlay, however, which made us about half a risk unit. So we didn't lose anything on the H4 impulse, and we made back half a risk unit on the overlay. Looking at indices weekly on the Dow, continuing to respect this resistance level. So those of you following the news know that there's lots of nervousness around the US economy. And it looks like that on daily. So it looks like today we had that bearish engulfing impulse candle on Friday. Today is definitely following on from that, and this is way before US markets actually open. So these are all based on the futures markets, not showing much optimism, obviously. And yeah, that's pretty much follows through. The S&P being, having been much more bullish over the last several months, looking like that on weekly, which means that this bullish trend is still definitely intact on the weekly time frame, and even on daily. So daily, however, if we get a lower close here today, we've got phase one, that would mean that this is completely over. You'll notice that we did have a couple of daily impulses here, which this one actually got stopped out at break even, which was quite annoying. And this one over here managed to take profit. So relatively stayed. That's one thing about these markets, is if you are trading the indices, please don't forget that our strategies really work best in a bullish direction and shouldn't be used to trade them down. NASDAQ weekly, likewise, similar picture to S&P, and very, very bullish for what's this, over a month in any case, and that has certainly also been tradable. I haven't actually put in any of the analysis over here, but clearly there have been multiple really, really nice trades here on the daily impulse. And here again, we're seeing this potential reversal pattern taking place. And in fact, strictly speaking, this bullish wave here was a phase 2. So phase 2, and don't be surprised if we either see establishment of a bearish breakout here or a bearish cyclicity establishing itself. But remember, we don't second guess the market. So that's pretty much it from me, folks. I see that there aren't any specific questions coming through, but if you do have any, please do pop them into the chat box. If you're watching this as a recording, then feel free to use the comments below, and happy to answer any questions that you might have. So just to wrap up, I'd say that we've really got much nicer conditions prevailing right now. Let's make the most of them. Like, hey, well, the sun shines. No idea how long it's going to last. It could evaporate at any time. So just be rigorous in identifying those conditions according to your trading plan, which reflects your risk appetite and that of your clients. And then follow the strategy rules absolutely rigorously. And as long as you have a convex approach, then there's nothing to worry about. All right, folks, that's it from me. Keep an eye out for new stuff that I'm going to be bringing out. I do want to make sure that those of you who have applied for the Trade Manager are able to get that installed really soon. So I haven't yet responded to any of you, but certainly we've had lots of interest in that. Thank you very much. If you haven't yet applied for it and do want to, please bear in mind that even if I can't accommodate you in this round, I am going to be getting new licenses soon, and those who have applied now will be at the top of the list. And then finally, I did also mention during the course of the bootcamp that folks have been asking me to do a mentoring program, and after much mulling over it, I've decided to go ahead with that, and it will only be for a limited group of people. If you are interested in that, then as with the Trade Manager, I just need to ask you to complete a short application. It's just a questionnaire, basically, which also helps me to understand where you're at. So once I know where you're at, then it will really help me to accommodate your issues in the mentoring program that we are putting together. So the links for that will be put below the recordings for this. They are also in the Academy. The Trade Manager application link is in the Strategy Center. You'll find it there where it says the Trade Manager training is, and I think it's in installation and requirements section. And then there's also a link I do think it's in the Trader Development Center. And there is a link for you to apply for the mentoring program, I think, at the start of the Foundations program, and also at the start of the technical analysis skill set section. So there's a couple of links for you to use, which will just take you to a short questionnaire, as I mentioned. And yeah, that'll help me to help you. All right, folks, thanks very much for being here, and I'll chat to you later in the week. Bye for now.